So in this video, we're going to get into why Lockheed Martin was higher for the week while the broader indices were down. This is the monthly chart. You can see how price pulled back into a monthly buy level at $445 and then started moving higher. You can see that a bit better on the weekly chart as price came into the zone and then started moving higher as the buyers determined that price was selling at a huge discount relative to where price was just in November of last year, hitting near that $620 level. Now, before we continue with the analysis, let's actually get into the news. So an analyst price target bump was the news pushing shares of storied defense company Lockheed Martin skyward as the trading week came to an end. The stock ended the day 3% higher, while the broader S&P 500 was down 0.6. Now, Matthew Akers, which is an analyst at Wells Fargo, raised his price target to $476 from the previous target of $468. However, that wasn't enough to push the recommendation into bull territory as he maintained his equal weight recommendation on the stock. According to the reports, Akers' modification stemmed from interest in U.S. defense stock from abroad. While this is currently muted, it should raise once the funding situation for the industry becomes more clear. Now, currently, through the leadership of the recent created DOGE, the Trump administration has made moves to cut staffing and budgets at various federal agencies. Nevertheless, it has created a level of uncertainty with enterprises that conduct business with the federal government. The defense and aerospace industries are particularly involved in this way due to no small part to the military contracting. Now, the author of this article says he feels investors are right to be hesitant about the U.S. defense industry, or really any industry or company that's reliant on the federal government as clients. DOGE work is far from over, it seems, and at this point it's still somewhat unclear how deep its cuts will be at various agencies. Nevertheless, the smart money knows and can sniff out price when it's at a discount. And this is Lockheed on the daily chart. Now, I mentioned how could you have gotten into this trade. Yes, you could have taken this zone outright. You would have had to put your stop much lower than the zone. I like to put my stop at the bottom of the zone in this case. Now, if we zoom into price action, you have this support or pivot low, pivot high. You have some resistance here. You have a pivot high there. So this becomes a local support resistance band at that $448 level. As you can see, price was continuing downward until price paused and started moving higher. Now, the setup would have been a break above this level. Could have went long or pull back to this support resistance band at 448. And that would have been your opportunity to get long. Now, price targets, I do have a gap fill, also some resistance support at $500. That's a round hole psychological number, so that becomes your target 1, which is just below the key 200-day moving average. And then target 2 becomes this weekly sell level at $540. And that was formed back in November. The drop, 2 basing candles, and then the leg out. Thanks for watching. Subscribe. Please like the video.